So those are my strong conviction plays. Now, it depends. If we start going in towards that really crazy altcoin season, we start seeing Bitcoin dominance collapse, and we start seeing the others to Bitcoin ratio, which is the ratio of all other altcoins below the top 10 in market cap to Bitcoin, starting to rally again. The sign that we've got this altcoin season coming. Then I'm going to start looking at lower cap altcoins within these particular ecosystems that have done well.
GM, good morning and welcome to the Milk Road Show, the daily crypto show where if you look in the mirror and say alt season 3 times, Gary Gensler will appear and send you a Wells notice. I'm your host, John Gillen. Today is Tuesday, September 16th, and we are joined today by Nick from the CoinBureau. Nick is the co-founder and CEO of CoinBureau, a cryptocurrency education platform that he launched in 2017 after transitioning from a TradFi career that included a role in investment banking at Goldman Sachs. He helped grow the CoinBureau into one of the best brands in crypto with a focus on independent and accessible education for everyone, which is something we love here at Milk Road. Today, we're going to be talking about Bitcoin, getting his outlook for Q4 and beyond, Hyperliquid, what's going on with their new stablecoin that everyone's talking about, and yes, even alt season. So make sure you stick around to the end so you don't miss any of the great alpha that we're going to get today. Like and subscribe, share this episode with somebody who's going to enjoy it and who needs to hear it. And as you know, we have a team of researchers here who live and breathe crypto at Milk Road. Each week, they drop a sharp report on what actually matters in crypto. Last Saturday, we released a pro report all about platformization, the new era of DeFi. There's so much changing, so much going on. We broke it all down for everybody. You can read the report, get all that alpha. Make sure you click the link in the show notes to join our pro community today so you don't miss out on what's going on there. Today's episode is brought to you by Figure Markets. Grow your cash like a bank, no lockups, just real returns. And KGeN, the verified distribution protocol, changing the growth game. And without further ado, welcome to Milk Road. Nick, how are you, sir?
Thanks, John. Thanks for having me. Thanks for that intro. And I'll just say before we start, both me and Guy are big fans of the Milk Road. We've been following you guys since your progression from the newsletter days, and it's amazing what you guys have built. So I'm glad to be here finally on the Milk Road show.
Well, I'm very happy to have you. It's funny you mentioned that. The way I found Milk Road was from a CoinBureau video where you guys recommended their newsletter. So
how
it's
crazy
a full circle moment.
Works, man. Go full circle. Wow. Well, I'm glad you're there and you're happy now. And, you know, our recommendation landed you in your dream job.
It paid off in many ways. I thought a great place to start this conversation today, Nick, which would be with something that's been on everyone's mind, which is where are we in the cycle and where's the top going to be? I think on CoinBureau recently, you guys put out a video calling for a top in market cap of somewhere between 6 and 9 trillion. How did you arrive at this prediction? What are you thinking of in terms of like where the bulk of that market cap is going to go? What are you focusing on going into Q4 as it pertains to this cycle?
Yeah, so I guess, firstly, I think in terms of that video you're referring to, it was a reference to kind of a rudimentary estimation of where the total market cap, the total crypto market cap could go this cycle, based on looking at where it was in terms of a support in the bear market, which was about 800 billion, and then, you know, the resistance in the previous bull run, which was about 2.9 trillion, and the difference between that is 2.1 trillion. So if you add on it, you assume in a separate distance between, and we now flip the previous resistance is now a support, and we flip that to another resistance level above for the next total market cap top. You know, it's about plus 2.1 billion from the 800 billion to the 2.9 billion, which therefore comes out around 5 trillion. And then you add a few stablecoin, you add all the stablecoin liquidity, all the token unlocks for all the other altcoins, RWAs, and new cryptocurrencies. And you have kind of like a very rough rudimentary estimation of about 6 trillion. You could also look at other things in terms of like how the previous cycles have grown. So in the first cycle from 2014 to 2017, the total market cap grew by 37 times. The cycle 2017 to 2021 from, you know, previous high to the next high was about 4 times. So assuming some sort of a diminishing returns as well, get to a rough estimation of about 6 trillion as like the conservative estimate for the total market cap for crypto, for the total crypto itself. Obviously, the total comprises of Bitcoin and altcoins, and then there's the question of, you know, how much of that is going to be Bitcoins and altcoins. I think that, it'll have a rotation eventually into altcoins, which we can get on in a bit. But that's how we got to that number. I think that's kind of like our conservative estimate from that video.
Okay. Yeah, look, there's a lot that goes into making these kinds of predictions. I really appreciate you breaking that down for the audience. We'll see what happens there. I think there's a lot of ways to approach this. I thought the market cap approach was an interesting one. Last week, I did an episode with Caleb Franzen, who's a great TA analyst and market commentator. We went through dozens of different charts, but Caleb said he's still calling for 175K Bitcoin, maybe higher than that. Some analysts are saying even higher at 250K. When and where do you see the peak coming specifically for Bitcoin in this cycle? Are you calling for that in Q4? Do you think it'll be later? And what's sort of the range? Like you gave a range on market caps. What's the range on Bitcoin that you have in mind for yourself going forward here?
Yeah, so I mean, that depends on a number of assumptions. First of all, are we still in the 4-year cycle, i.e. follows from last? I mean, let's assume it is just for argument's sake, then, and we assuming past performance could potentially play out in this cycle. Well, I mean, in the previous, you have the 3 years of the up bull market and then 1 year of a bear market. And in the final year, if we assuming people thinking this is the final 12 months, final year of the bull market, the Bitcoin bull market, we could take a look at the previous 2021's bull market year, and then we had about a 60% rally from January to December in that year in Bitcoin, which is about a 60% growth. So if you're assuming that the past plays out, and we were about 90K in January, it's about by the end of the year 150K. That's assuming it plays out according to the previous rally in the third year of the Bitcoin bull market. So that's based on past performance. There is another interesting indicator you could look at, and that's basically end of the year, so Q4. I think that there's the macro factors around liquidity, which is coming in from the Fed. Obviously, this is the day before the Fed interest rate cuts of the FOMC. So going into that, there's going to impact the liquidity moving into the market, which is going to take Bitcoin up towards the end of the year, because liquidity takes some time after the rate cut to move into the markets. Monetary policy takes some time to move into the markets, to move the liquidity. So Q4, my conservative estimate is Q4, potential Bitcoin top at 150K. Now that could extend out if we have an elongated cycle, if you have Bitcoin running further. And there are other higher estimates, which we all know about. Yeah, one indicator you can look at potentially is you can take a look at the 200-week moving average of Bitcoin. And when the 200-week moving average, generally, historically, it's always been this case. When the 200-week moving average has crossed over the previous all-time high, it has marked a top, the Bitcoin cycle top. And based on that, if you extrapolate it out, so this is basically just an extrapolation out the 200-week moving average. And if you see it's now, if you extrapolate out the 200-week moving average with that red line over there, we could potentially hit the previous all-time high of 68,900 by about June. Right. So this, according to this metric, which has been consistent every single time since the previous, since all the other bull market tops, has consistently marked their high. So that's what this indicator is saying. And there's another thing called the Mayer multiple, which basically looks at how far above the 200-week moving average Bitcoin goes. And there is also diminishing returns in the Mayer multiple. So the TLDR is this could basically looks at Bitcoin, and it says that we could reach a cycle top of about 220K by June. So I think that based on that, my estimate of range, I know it's quite a wide one, but is potentially conservative, early bull market end. Well, early, not necessarily, because I mean, if you look at the past halving, we're already like past 18 months prior to the previous halving, which is when the bull market top usually would have happened. But let's assume it's extended out, and then liquidity is coming in with the Fed. We see in December, the end of the year, potentially for 150K top, extending potentially out to 220K, assuming the Mayer multiple and the 200-week moving average. So I know it's kind of a wide range, and I'm giving myself quite a large berth here. But I think that's important too, because it's very difficult to try and give an exact cycle top, because sometimes people sell beforehand and the market retraces beforehand. But that's the range you want to be looking at. But if you've made solid gains already, and Bitcoin does go towards the 150K level by the end of the year, it could be a good decision to start DCAing out, I think.
Yeah. So I think that there's a lot of alpha you just unloaded on us there. But what I would say is like, what I like about your thought process around this is not being dogmatic about one indicator or one specific target. You're saying, okay, here's the range of possible outcomes. Here's a number of different ways to think about the market, about where a top might come, when a top might come. And this is, I think, where a lot of us in the market are right now, is like, nobody wants to be saying this time is different, but a lot of things about the market structure have changed. and it's difficult to pinpoint these things, and that's what you don't want to get stuck doing. That is like getting very fixated on one specific date, one specific price, and then missing what the market is actually telling you is happening.
You're never going to time the top, man. You're never going to time the top. I mean, yeah, I mean, technically it's very simple. All you got to do is you got to sell the day before that Bitcoin tops. Yeah, that's just simple. That's some crypto trading 101. Sell the exact day before it tops, and then you buy the moment it hits the bear market bottom. But yeah, timing the time in the tops is very difficult. And there are so many factors now which we can talk about in a bit that is driving Bitcoin's market performance now, not just a historical metronome of market cycles.
Right. Yeah. Well, so I want to talk about one thing that you mentioned, which is supposed to happen this week, is the Federal Reserve is expected to announce interest rate cuts. Some people are saying 25, some people are saying 50. Personally, I don't really think it matters either way. Between now and the end of the year, we're going to have interest rates come down at a material level. There's about $7.5 trillion sitting in money market funds right now, just accruing interest and not being deployed to risk assets because people are kind of in this defensive environment. A lot of people are saying that once the Fed cuts, just like you were saying, there's going to be a lot of liquidity that comes off the sidelines, and that's going to be a big bullish, kind of wave of capital for Q4. How much of that do you think comes to crypto? Does it all go to Bitcoin? Does it go further down? Like, how are you thinking about how this is going to play out in the market when the Fed actually cuts rates, and what are you watching for there?
Yeah, how does liquidity flow into the crypto market? You got to ask yourself, what are the mechanisms right now, and how things have changed since the prior cycle? Obviously, Bitcoin is a risk asset. I know that people say it's kind of like an inflation hedge, and people think of it as a gold, which is generally a risk-off kind of like a hedge kind of asset. But Bitcoin is a risk-on asset. It generally flows with liquidity. In fact, if you track Bitcoin's history using global liquidity indicators, I believe it's going back till 2011 or 2013. It's a very, very accurate. In fact, there's like a 90% more correlation between global liquidity and Bitcoin's price cycles. So liquidity will impact on Bitcoin, and it will perform as a risk-on asset. When the moment the liquidity starts flowing into the market, it's going to go in pursuit of higher returns. Of course, you mentioned the money markets. You earn in, like, as rates start going down, money market funds can't return anything reasonable, and people will then decide to move into risk assets and other kinds of assets with higher returns. So generally, as the liquidity flows, it goes through Bitcoin initially, and now there's a lot of mechanisms which allow the liquidity to flow into Bitcoin a lot more easily and streamlined, and that's mostly the ETFs, right? So that's allowing for it's like a streamline in the liquidity flowing into Bitcoin. So that's why it could be potentially more explosive in terms of price action. Now, that's into Bitcoin. The question of how it goes down and the liquidity flows down into the altcoin space depends on the mechanisms that are available to be able to do that as easily was with Bitcoin, more specifically altcoin ETFs. So there is going to be liquidity flowing into Ethereum because Ethereum ETFs do exist. It's a lot easier for an investor to allocate through an ETF because they can do it in an IRA or one of their retirement savings accounts, and it's a lot easier for them to access these through brokerage accounts. And so therefore it's also easier for them to rotate. If you've bought into Bitcoin initially, you've made gains on Bitcoin, you're going to want to flow down and look for higher returns down the altcoin risk curve. Start with Ethereum. Indeed, we've seen already some of that initially, front running of that with Ethereum's recent rally, and the ETF inflows in Ethereum have been monstrous, even compared to Bitcoin. So that's going to Ethereum, and then it's going to start as people look for higher returns down the altcoin risk spectrum. That's generally how the rotation happens, how we start moving into altcoin season. But in this case, we don't really have that many ETF products out there for other altcoins. We've got some Solana ones, but it's they're nowhere near as expansive as those on the ETH side. So we need more of those retail-friendly products on the altcoin side to see that liquidity flow as easily as it did into Bitcoin and Ethereum. So I think it's definitely going to have an impact, but the impact it will have down the altcoin risk curve will be it will be impacted by how much, whether you have these investment products similar to what you've got in Bitcoin and Ethereum in terms of ETFs.
I think you're kind of leading me into another subject that I wasn't going to get into later, but since you brought it up, I'd love to hear your thoughts on this. There are a ton of outstanding applications for ETPs, ETFs, for altcoins with the SEC. A lot of them are due for review and a decision in October, I believe. Solana is top of the list for that. A lot of people are watching this, saying this is going to be very bullish for all these coins and for the broader alt space if that approval comes. Do you think that this is going to be, I'm kind of going back and forth about this in my own mind. We saw a ton of demand for the Bitcoin ETFs, a pretty strong amount of demand for the Ethereum ones. But as we get further down into some of these like smaller cap altcoins, I'm kind of questioning whether or not there's a huge amount of demand there. How are you thinking about this? Is this going to be a big catalyst for the broader altcoin market, or is it going to be sort of a nothing burger or somewhere in between? How are you thinking about all of this?
Yeah, it's a very good question. I think so. Although you just got an ETF, it doesn't mean that it's going to be just that's the magic ingredient for an altcoin to rally and people are going to want to buy an altcoin, right? Because at the end of the day, there still has to be an investment case behind it. And, there has to be a narrative in terms of an altcoin narrative that people can understand and will want to invest in, and a niche that is retail friendly. So that's the investment case. Now, just because you've got an ETF product, yeah, it makes it easier, but that doesn't mean that you're going to necessarily want to invest. In the case of Ethereum, if you remember when the ETH ETFs launched, there was like crickets for months, right? And that's just because at that time, the narrative wasn't clear. People didn't really know what the benefit of it was over Bitcoin. And it kept on, they bled initially in terms of outflows from the Grayscale product. And then even this year, it was crickets for months. And then you had Tom Lee coming out there, especially with the digital asset treasury companies, which we can talk about in a bit. And basically the narrative picked up and retail could understand it, the shilling on all the TradFi media. And then the allocation started to these ETFs. So having all these products out there, they're going to launch, there's a lot of applications out there. And some of them, multiple for altcoins themselves, which haven't really found a bid in this current rally. So I think it is going to be disappointing for some of them. It's going to be great for those that have a good narrative behind them that have already had some price action. I think the Solana ones are going to be bullish for Solana, that's for sure. Maybe some of the other alts that have done very well more recently, potentially, if we're going to have ETFs listed for them. Maybe it's like altcoins that have strong community members and that have OG altcoins, kind of like the XRP kind, could potentially catch a bid. But I think most of them, there's going to be a bit of, we've had altcoin dilution in the crypto space. We could have altcoin ETF dilution in the ETF space. So it could be a bit too many, and I think that it'll be difficult. So you need to, there has to be an investment case behind it, not just it's an ETF.
Totally. Yeah, and I agree. I think this is an important lesson to learn for anybody who's investing in the market, is that you need to have a strong thesis, strong fundamentals behind it, not just a momentary narrative or catalyst that lasts a week type of thing. That is a great guiding principle in the rest of the market. I want to ask you about a video you posted recently where you talked about a lot of things that are different this bull run as opposed to last bull run. Some of them are very structurally bullish, right? We talked about ETFs, DATs, which I'll ask you more about in a minute, and then regulatory support. But you also noted something that I think is impacting the altcoin space that I wanted to get you to elaborate a little bit more on, which is that people are paying less attention this bull run. There's much more things competing for people's attention. We're not in the middle of a lockdown, so not everybody's like, locked in, like studying the altcoin space all the time. How are you seeing this have an impact on the market? Do you think that retail just doesn't care about crypto anymore? Or like, how are you thinking about this attention problem and how that's impacting the altcoin market performance?
Yeah, I think it's a big concern. And I also think another thing is crypto itself. What is the main narrative and what is the mainstream narrative of crypto these days? I think it has become quite politicized to the extent that, some people may think of crypto, oh, it's just meme coins. Oh, it's just, an opportunity for the people who already have money to make money in crypto, and they go and they invest in other kinds of stocks. And and in that video, we made the point that in the previous cycle, many people thought that crypto rallied because of the stimmy checks, but we actually found, or the Fed actually released a paper that most of these stimmy checks went into, buying retail products and paying down debt. So it wasn't really necessarily allocated to crypto. It was just because people had the time to spend to actually research crypto and understand it, and they were locked down. They had nothing else to do. They wanted to go and trade, the meme stocks and crypto. So in this cycle, I think that definitely the attention is, there's too much stuff going on in terms of as well for people to worry about. And I think that this attention is lacking and focus on the crypto space. And also now the crypto space has become, there's so many cryptocurrencies out there in terms of like whereas in 2021 you had you could research a few of the top tier L1s and maybe L2s. Now you've got just so many altcoins out there, 50 different L1s, 300 different L2s and the different L1s. You've got different narratives, different niches. So I think that you've got less attention, and you've also got way more things for people to try and research, and it's just too daunting. And then add to that the question around the politicization of crypto, which is basically potentially alienating some people on a particular spectrum of the political spectrum. So I think that it will be difficult to grab that attention right now. But I think that the best narrative, the best marketing agent for Bitcoin, or indeed any cryptocurrency, is the price, right? And eventually people are going to see, if Bitcoin does go through with all-time highs and goes to 150K or higher, and we do start seeing an altcoin rotation, Bitcoin dominance dropping, altcoins rallying. You see some of these previous altcoins that people knew about in 2021 cycle, the likes of ADA, XRP, etc., rallying, and they're checking their accounts again at Coinbase. They're like, oh, wow, okay, cryptocurrency market's returning. They're going to want to find out, where can I get the next 50 to 100x, and then you start seeing all the other newer altcoins popping off and climbing to new all-time highs. That will itself generally generate interest, and people will start paying attention again. I don't think it's going to be, we can talk about the altcoin season, how big it's going to be. I don't think it's going to be as crazy in the 2021 cycle. But I think that is what's required. We do need to have price moving in the right direction for people to actually start paying attention again, because I don't think that they really are right now.
The best audience to distribute your product to? Your super fans, duh. But what if you haven't found them yet? That's where KGeN comes in. They help businesses scale digital distribution at a price that makes sense. KGeN's verified distribution protocol identifies the best users for your product and connects you directly to them. Ready to find real meaningful users for your next big product? Join the KGeN network today at milkroad.com/KGeN, spelled KGEN. Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
Price is definitely the best marketing and the best public relations. Solana's price has been struggling a bit recently. Up until the last few weeks, it's really turned around, started to recover. Matt Hogan from Bitwise wrote a memo from the CIO last week calling for Solana season, all about why he's bullish on Solana. It's now, I think the price is getting back towards $240. So we've definitely seen a strong recovery from the lows there. What is your thoughts on this recovery and this bullish action in Solana? Does this have legs? Is this rally going to keep going? Is it just, is there just a recovery, like a reversion to the mean? It got oversold, it's bounced back. What do you think is going on with Solana?
Yeah, I think it's got legs for sure. I think, I remember 3 weeks ago we were doing a stream talking about the Sol ETH chart was one of the one of the most disgusting charts there was, and right, if you think back to about April, the long ETH trade was the most hated trade there was. Like, no one was touching that, right? The whole of crypto Twitter was against ETH. And the same, to a degree, the same thing was about 3 to 4 weeks ago when Sol ETH was at near lows, near 2-year lows or something. And it indeed, you could have said that was the most hated trade. And I remember saying on that stream that it's going to bounce eventually, but timing that is difficult, but it's going to, and it seems as if that started. And in terms of, we can take a look. We can put our chart up. Actually, I put a tweet out about key levels for Sol to have broken. And it was basically Sol broke through. It had a golden cross. So we had the 50-day moving average cross over the 200-day moving average. Golden cross is generally quite bullish. It also broke through the Fibonacci golden ratio, which was acting as a resistance previously, and that's a strong. And generally, people who follow technical analysis know that the Fibonacci golden ratio is an important one. And we broke through that resistance, and once we broke through that resistance, it kept on going higher and higher. So technically, Sol is looking good from a price action perspective, and that's just the TA side of it. We've also got the fact that now you've got these DATs, so these DATs, right, that are coming out that are just accumulating gargantuan amounts of SOL. We just had the Forward Industries with $1.6 billion pipe deal. We also had an announcement of another one called Helios Investments, which I think is a medical company accumulating up to $1 billion of SOL. So the DATs are coming through and they're accumulating. So SOL open interest is near all-time highs. And there's also questions around the tech upgrades. There's lots of exciting tech upgrades. So the narrative has shifted. And SOL is now moving. And I think the SOL ETH chart has legs to it for sure. And now I think that the markets are paying attention again as well.
Yeah, so a lot of great lessons in this for our audience about how to think about markets. If you look at what Nick's saying here, right, he's bringing in technical analysis of what's the market telling you from the charts. He's talking about fundamentals. He's talking about adoption. He's talking about bullish catalysts and narratives. But also underlying all of this is not just a chart or a number going up or down. There's also a really strong fundamental thesis on Solana as an asset, right? So it's like there's a there's a great product, a great token, a great community, great fundamentals, and then paying attention to all these other things around this helps you form that narrative. I want to ask about these digital asset treasury technologies. They resuscitated Ethereum, as you said, and seem to be doing the same thing for Solana. There are now, I think there's over 150, maybe 180 digital asset treasury companies. I honestly can't keep up. There's more all the time. Yeah. But I think it's a similar thing, a similar story. You know, some of them are going to help, like with the ETFs, right? Some of those are going to help those assets performance. Some of them, the market's maybe not going to respect so much. How are you thinking about this in terms of like, what are the risks with the digital asset treasury companies? How do you discriminate between those, right? Like we just went through your thought process on Solana, right? How are you thinking about these digital asset treasury companies in terms of like how to evaluate them, which ones matter, which ones are worth paying attention to, and which ones are just, you know, kind of a Me Too business? Like, what are your thoughts around this, as this kind of seems to be a narrative that's taking over the altcoin space too?
Yeah, so I'm actually slightly more bearish in the short term. I don't think it's necessarily so. Many people have these questions around tail risk for crypto. Are these digital asset treasury companies going to start dumping their Bitcoin or their crypto because of them trading at MNAVs that are negative? And if price starts going down, is this going to lead to cascading liquidations? Not the case, because they have debt structures and deal structures. It's not like an automated liquidation on an exchange that you have with, you know, short positions or long positions that get liquidated. But there is the question around obviously debt being called and having to potentially sell these crypto to service that debt at some point. And that's been a big concern around the market. And the biggest concern right now is a lot of these digital asset treasury companies are trading close to 1 MNAV, so the multiple to net asset value. And that means that obviously the value of all of their market cap or their enterprise value is close to the value of their underlying assets. Previously, these had been trading much higher, which would have then have allowed them to go out and issue more shares to go and accumulate more assets. But now as it approaches 1, that how appealing that issuance is, it decreases. And when it becomes less than 1, therefore your market value, enterprise value, is trading less than the value of the underlying assets, then it's actually dilutive and you get no returns from that. And I've actually got a chart here on Twitter if you want to just pop it up. This came out yesterday. I think it was Standard Chartered. And this has got the hopefully you guys can see it. It's got the MNAV ratio of some of the biggest DATs out there. And these are only 6 of the biggest: so MicroStrategy, Metaplanet, SBET, Bitmine, Upexi, and DeFi Development Corp. And right now they're trading close to 1. The only reason Metaplanet is trading, above about close to 2.5 is because of a tax rule in Japan. But look at like SBET, it's below 1, below 1 right now. It's been languishing below 1, which means that it can't really go out and issue more shares to buy the asset. So TLDR is in terms of what I think is going to happen with the space is like, it's not necessarily negative for the cryptocurrencies themselves, because as I pointed out, they're not going to be forced into liquidating their assets. And the biggest player, which is MicroStrategy with Bitcoin, he's never going to sell. He's a rock hard hodler and he's been through previous cycles. But I think the DATs and DATs that are going to do well from the perspective of stock and potentially manage to continue accumulating are those that have, it's a network effects, those that already have, that are out there, that have managed to demonstrate and execute. Those are the first mover advantage. So that's going to be the likes of MicroStrategy on the Bitcoin side. That's going to be the likes of Bitmine on the Ethereum side, potentially Forward on Solana. But the more that these DATs come out, we're starting to see this massive DAT dilution, and the MNAVs of all of these are trending lower. And I think that the marginal DATs are going to eventually start winding up and facing trouble. So as they are indeed already. But I think that that's more of an issue for the DATs themselves. Obviously, there will be, if these DATs themselves, the share price will collapse. But if these DATs themselves stop accumulating as aggressively, that is going to potentially mean that a strong bidder for the price of the asset for the price of the crypto asset is out of the market. But then again, there's the other question we talked about in terms of general liquidity, retail, etc., ETF accumulation.
Yeah. So there's a lot there. I really appreciate that perspective. I agree. I think I've heard a lot of people saying that the digital asset treasury companies could collapse, kind of like FTX or Terra Luna last cycle. I don't see that risk. So I agree with you there. But I think that the worst thing that might happen is they might all get acquired at a discount, but like it's a problem for the companies, not so much the underlying asset. So I think that's an important distinction there. So I appreciate that analysis. I want to ask your thoughts on
one theory I have heard is that a lot of these altcoin DATs that are trading below MNAV, they become interesting acquisition targets. And a conspiracy theory I've heard is that potentially Michael Saylor could come out there and use the positive MNAV on MicroStrategy and the good financial position they're in and the debt terms they've got to go and actually acquire all of the altcoin DATs and then sell all of the altcoins and buy Bitcoin. Like a hostile takeover of the altcoin DATs, just buy more Bitcoin.
Well, business is business, I don't know. That would be really diabolical if he did that, but I would, the game recognizes game. We'll see what happens.
Yeah,
I want to ask your thoughts on something that has stolen some of the hype, which is Hyperliquid. There's been a lot of attention on this project. It's really exploded in terms of the market share that it's captured. I think they're now doing about 80% of the perps market. Daily volume of $10 to $12 billion. So it's really kind of come out of not nowhere, but it's grown really quickly to take over a huge part of the digital asset marketplace. Last week, they approved a project to launch a new stablecoin called USDH. I think, maybe just start with tell us a little bit about the story here, set the table for the audience. I think this is new information and it's kind of game changing. So I want to get your thoughts on this. Tell us about this stablecoin. Why is this important for people to know about?
Yeah, so I mean, look, the goal of it was to create a Hyperliquid aligned stablecoin that was compliant and they could plug directly into Hyperliquid. And as you mentioned, they realize there's a lot of money sitting there right now that's for the taking. And if they put their own stablecoin into it, that's a massive opportunity for them, especially if it is they are sharing the yield. Which is what many of these potential bidders had offered, right? So because what these obviously stablecoin issuers make hundreds of millions. I think Circle, there was estimates Circle could have made like $200 million a year on just the liquidity that Hyperliquid has in terms of the total USDC being held in the Hyperliquid vaults. So I think that, and Hyperliquid realized this, and they thought, okay, it would be another opportunity to provide liquidity incentives and potentially share yield to hype holders and also the Hyperliquid community. So this is what happened. They put out a request for proposal. There was initially the first entity or company or startup that issued that applied for that was Native Markets, which was a Hyperliquid aligned startup, very new one. And then many others also entered the bidding process, and eventually Native Markets won, which there's questions around that, which we won't get into right now. But yeah, that's the gist of it.
I think the thing I would say too that stuck out to me was that the competition that they beat was Paxos, Athena, Sky. There were a lot of big players in the space who were competing in those proposals, and Native Markets won. The differentiator in this that I see is that they're promising to take the revenue, like you said, like Circle's making $200 million a year off of the liquidity on Hyperliquid. There's about $6 billion in stablecoins on that platform. The proposal that Native Market made was to take that and reinvest that into the Hyperliquid community. I think that the question I have here around this, there's a lot of them, but do you think that this model will continue to happen on other platforms? Meaning, as we've got the Genius Act, we've got stablecoin legislation, other issuers of stablecoins are going to be able to launch their own stablecoin, and Circle is going to have to kind of fight for its market share. Do you think this is going to become a more and more common thing where people are like, hey, come to our platform, but we have our own stablecoin that reinvests in us? How much copycats do you think are going to be from this versus how much is this a unique to Hyperliquid type of a situation? What are your thoughts on that?
I think, well, there's a few factors here. One is why would a project or protocol or indeed company, because now the State of the Genius Act is going to allow banks, payment processors have also launched their own stablecoins. What is the incentive for them to do that? There is the potential opportunity for yield sharing, but now we're going into a lower rates environment potentially. So how much that appeals to them if the rates are falling, they'll be less appealing for them. It also depends on the distribution you've got, right? Hyperliquid is unique in the sense it's a massive beast. The same thing we've seen with some of these other big payment processors that are launching their own stablecoin, and indeed their own chains. The same thing whereas banks have massive distribution, they will launch their own stablecoins. You'll have a banker stablecoin, which will be shared among different Wall Street banks. But yeah, you have to have the distribution, you have to have the reach, and it has to be there has to be a reason for you to want to do it, and how it benefits your holders, your community, your protocol. So with yields falling, it's going to be less appealing, I think. So you'll see a bit less of this. But I think that, I think that if you have the reach, you'd want to do it. And so there's other big protocols out there that could potentially explore stablecoins, but it would have to make sense because the problem is, if you have too many of these other ecosystems protocols, L1s, L2s launching their own stablecoins, then it's going to basically split that liquidity so much, and then it makes the user experience so much more worse, especially for new users who join in this space, like 50 different variants of stablecoins. How are you going to bridge across the 50 different places? So you're basically running the risk of really splitting the liquidity and making it a less easy user experience for new users who come into the space.
Yeah, so I think that this is one thing I've been thinking about a lot, which is, are we seeing mass adoption or are we seeing fragmentation? And I'd like to get your thoughts on that, because I think that one of the benefits of having this regulatory clarity is that more market participants can come in. However, now almost every app, so like I said at the beginning of the show, we wrote a newsletter on platformization and how all of these different dApps and legacy platforms and apps are trying to bring in similar products and services so they can all become a super app. But not every app can be a super app. So it's like, it's just like you're saying, everyone's building their own version of these things. What are your thoughts on how this resolves? Are we going to continue to see just more and more fragmentation of liquidity, of users, of products? Or do you think that eventually this will come back together and cohere into a mass adoption? Like, will there be like a one or a few winners out of this? How are you thinking about this? Because for me, as a person in the market, I feel like I'm getting the benefit of a lot of innovation, but I'm also getting overwhelmed by choices and just changes and so much going on and splitting everywhere.
Yeah, it's a very good question. I think on the back end, obviously liquidity and there is network effects in crypto, right? Developers will go and build on chains that have the liquidity, have the div, have when most of the other protocols are building as well, and there will be some sort of a coalescence around these protocols where you have network effects. But I think that the main thing from a UX perspective is you may have the situation where you have a lot of these different chains, a lot of these different protocols still, but the real unlock for users and for mass adoption is not necessarily to coalesce around one particular ecosystem, one particular chain or dApp or whatever, but to abstract away the front end of it. Right, and abstract away all complexity. So ideally, you have some sort of an app that is able to easily utilize all of the back-end infrastructure, from bridges to liquidity providers, etc., such that a new user can get one single app and they can do all of this, and they don't have to worry about what's going on the back end, because that will be the massive unlock. And there are some wallets that are building out that right now that is making it a lot easier for new users. I mean, look at Phantom, for example. I mean, it's pretty, for a crypto wallet, it's pretty user friendly compared to many things in the past, right? So I think that if you have one of these projects that are working on account abstraction and abstraction in general, it's going to make it a lot easier for retail to come in and use crypto and get involved in crypto without having to worry too much about the back end of what's going on, which accounts, which chains are being bridged, and which stablecoin am I using, and which DEX am I trading on,
Right. Yeah. So I think that's the long-term benefit, is that over time, eventually this will be good for people. It just, in the meantime, it's going to be kind of chaotic. I want to just bring this back to Hyperliquid itself and the Hype token. They're going to be reinvesting their stablecoin revenue into the token. It's another buyback thing. It's another way of saying, hey, the community is benefiting from this. How high is Hyperliquid going to go? It's now trading over $53. It's an $18 billion market cap. Again, it's just like keeps going higher. It seems like, when is this going to run out of gas? How much higher is Hype going to go?
I think Hype definitely has legs to run higher. Obviously the market cap does make it does limit the reach in terms of where it could run to. But I think it's easy to see Hyperliquid still double in from here, especially if you do have an altcoin season. Look, I mean, it's from product market fit. There's very few projects out there that matches it in terms of protocols, and as a DEX, it's liquidity. Its volumes now are nearly eclipsing that of some sexes, right? And I think that it's found one of the projects that in crypto that's found the best product market fit. And right now, in terms of it's close to the top 10, and we talked about the liquidity that flows into the crypto markets, it's going to potentially come down the risk curve into other altcoins, and Hyperliquid now has got that mind share. It's got that massive mind share, and it's also got DATs out there as well now. I think that we could potentially see Hype ETF applications out in the next few months as well. So I think it's definitely got potential to at least 2x from here. More than that, I mean, like I say, it's difficult because it's already high market cap, but it's already run a lot over the past few months. So it's been a good trade.
Yeah, it has. And momentum trades tend to do very well, especially later in a bull run. Okay, so let me kind of synthesize some of this, and then I want to just get your thoughts on what you're most focused on in Q4. So we talked about how the Bitcoin bull run has not topped. There's still some more gas in the tank. There's a confluence of things that you're looking at to inform how you're looking at the market. You're looking at TA, you're looking at fundamentals, you're looking at narrative, momentum. You're also making sure that when you're looking at projects, you're evaluating, do they have product market fit? Do they have user adoption? Do they have revenue? Are they generating value? We talked about ETFs. We talked about DATs. We talked about how the Fed is going to bring a liquidity injection. All of these things coming together. Where are you giving most of your attention and your capital in Q4? And what should our audience be paying attention to going into the fourth quarter this year?
Well, I mean, I tend to hold, in terms of personally in my portfolio, I tend to hold most of it in Bitcoin, like at least about a large chunk, just because I think that I think Bitcoin still has room to run, and I think it's my digital gold. I hold that. I don't think I've held that for a long time. I'm trying not to sell it. I buy altcoins with fiat. I don't buy it with my Bitcoin. So I've just been hodling Bitcoin for a long period of time, and it's just grown. And historically, the APR in Bitcoin has been strong, and never sell your, like Michael Saylor says, never sell your Bitcoin. So I'm holding my Bitcoin. The altcoins, I think I like to run you're familiar with the barbell strategy, right? I try to take concentrated bets on high conviction plays. In terms of in the altcoin space, and varying on the risk spectrum. I haven't gone too far down. I don't like to dabble in too many low cap stuff, just because I prefer to do the in-depth research into it. I'm not going to YOLO on a particular low cap trade, a meme coin, etc. I used to hold some Hype. I sold out of Hype a few weeks ago. It was a good trade for me. I now hold I do hold ETH, sizable stack of ETH. I hold SWI as well, which is a very exciting layer one, alternative layer one, which has got a lot of potential this cycle as well. And I'm also thinking of moving, and I have got Sol as well, right? So I bought up some Sol a few weeks ago, like 2 weeks ago as well. So those are my strong conviction plays. Now, it depends. If we start going in towards that really crazy altcoin season, we start seeing Bitcoin dominance collapse, and we start seeing the others to Bitcoin ratio, which is the ratio of all other altcoins below the top 10 in market cap, to Bitcoin starting to rally again. The sign that we've got this altcoin season coming. Then I'm going to start looking at lower cap altcoins within these particular ecosystems that have done well. Solana and Ethereum. And I think that when it comes to those particular altcoins, like I said, the most important thing to be able to make sure to know you've got a coin that has potential this cycle is things around the narrative, the niche. Is it easily accessible for retail? And where is it listed? That's important. And yeah, indeed, the ecosystem itself. And another really big thing, big narrative that for this cycle especially, is coins that are generating revenue for their holders in terms of protocol revenue. And that is obviously used to be able to buy back tokens, which is accretive to the value of it. So that's another interesting niche you guys can focus on more specifically. So I know that's kind of a long-winded way to answer it, but I think that those are the few things I'm focused on. So hodl my Bitcoin, not selling out of that, and then looking at the strong conviction plays in the large cap altcoin side, and then moving down into the ecosystem plays when the altcoin season comes through.
I really appreciate the thoroughness and transparency of that answer. Tons of great alpha in there. Everybody can go do their own research and decide what they want to do, but it's really helpful to hear your thought process, how you're allocating. I wanted to end this conversation with a question that I just personally have been wanting to ask you, because this is something I've been thinking about a lot. I've been following CoinBureau since 2020. I don't think I've missed a video for many years. I'd love to know your why. Because when we started out in crypto, the idea was to try to replace banks, own our own data, own our own information on the internet, be able to exchange it freely, and completely revolutionize finance. And now it seems like crypto has split into this barbell where part of it is being co-opted by TradFi to extend and even amplify their control over the monetary system and the world in many ways. And then the other end of it feels like sort of this more like a casino of meme coins and high leverage gambling. Do you ever reflect on this and just think like, why am I still here? Why do I still believe in crypto? I'd love for you to give me kind of like a rah-rah, like, why does this matter? Why do you still believe in the promise of digital assets?
Yeah, it's a very good question. Sometimes in the vagaries of the crypto market, it is difficult to keep that vision, that long-term vision on. But yes, I mean, like you mentioned in the intro, I used to work in TradFi. I was on that side of the wall. I knew it wasn't fit for purpose, and I discovered crypto. And immediately, once I fell down that rabbit hole, I knew it was the future. Everyone talks about freedom of speech, freedom of association. Freedom is left and right, but the freedom of personal finance is key. And yeah, I mean, crypto has unfortunately become associated more recently with money, memes, TradFi takeovers, BlackRock's buying up all the Bitcoin for the ETFs or whatnot. And people see this and some of the OGs, lament it. But over in places like Africa, over in Asia, Turkey, etc., it's saving lives. People can use it to store their wealth. They don't need access to a bank account. And those kinds of stories are not getting the media attention. And that's why I'm still optimistic about crypto, because that is changing lives around the world. And, we as a business, our mission is mass adoption of cryptocurrency through education, or one person at a time. And the more people that we educate about the benefits of crypto, the less it is associated with all these other things that it is right now. So holding that kind of light is important for us. And sometimes it's difficult, especially with the narrative shifts, but it's been consistent throughout the cycles. We've maintained this vision: impartial, honest education, no sensation, no shilling. It's allowed us to maintain our standing through multiple cycles. So yeah, and it's also one more thing to say. It's invigorating when we go. Obviously, we are a media business with a YouTube channel, and we do content online. But when we actually do have the opportunity to meet our fans IRL and conferences, etc., hearing from them and indeed someone like you, hearing from you how you discovered crypto through CoinBureau and all this kind of stuff. It's an amazing experience, and it's very fulfilling. And it's hard to get that necessarily in other places. So while it's fulfilling to make money in crypto, great. It's also much more so when you actually hear people talk about how your work has helped them discover the space and learn more about it.
Well, we all appreciate you, Nick. Your work has been amazing. It's been amazing for me and for our community. So keep it up. Keep doing great work. Thank you for sharing that. It's just nice to hear it from you, and nice to remind myself of that. Where can we send people to find more of you and your work online?
Well, of course, on the CoinBureau YouTube channel, me and Guy. If you don't recognize my face, you no doubt recognize Guy over there, the legend, the OG. So the CoinBureau YouTube channel, I obviously post a lot on Twitter at Nick Crypto, so you can go and check me out there. Yeah, and we have a lot of other places where we put our content out. We have a lot of different channels as well. We have many different hosts now. It's not just me and Guy. It's people on our trading channel, and our Spanish channel, and our Mandarin channel. And we've got a lot more coming. So, guys, go and follow us there. Lots of cool stuff coming in the next few months.
Keep it coming, Nick. We love it. We love it. We are really glad to have you on the show today. I really enjoyed this conversation. I think our audience will too. Thanks so much for being here. Thanks for being on Milk Road. I hope we can have you back again soon.
My pleasure, John. Thanks, guys.
Absolutely. All right. Thank you all for joining us, and we hope we'll see you all on the next episode of The Milk Road Show. Take care. Bye.
If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.